Hello and welcome to this Wednesday morning, March 18th. We welcome everyone here today. Hopefully that nice weather is coming your way. Let's go ahead and get started. We got Connie Hill in the chat and myself, James Boyd. This is a weekly session, so we welcome you. And if you're watching on recording, we welcome you as well. We got with us Kevin Baker, Sharon, Kevin Hill, Texas, Bill Bornhof. We also got Willis, Grace H, Janelle, Jay Quinn, and Josh Pink, and many others. Welcome to all. Now, just real quick as we're getting started, got an interesting market here today. Got Brent oil trading if we close here, this will be the highest close we've actually had at the start of this Iran issue. And so we'll look at that in just a moment. We also got some sell-offs in precious metals, and so we'll bring that up as well, among other things. Now, it's kind of interesting when we kind of have some geopolitical things happening, kind of what happens to stocks in general, or what could happen, and how volatility can affect a portfolio during a time like this. So I want to kind of shed some light on that, and also want to talk about kind of some bullish examples and bearish examples in the scenario that we're seeing. Now, just real quick as we get started, you could follow Connie or myself on X. There's my handle. Connie will post her handle in the chat, or you can just click on it and follow her as well. We do post educational content there and also announcements. Now, remember, with what we discuss here today, the information is provided for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. Example given in a backdrop like we're seeing, having an understanding of how news can affect technicals or fundamentals, etc., that's important. Understanding correlation is important. What happens if oil goes up to the stock market and so on? You're seeing that unravel right in front of us. And also remember, when we talk about if we bring up dividend-paying stocks, those companies may reduce or stop paying dividends. They also could increase those and also have special dividends. That would be special if they did. Now, also remember that investing in stocks involves risk, including loss of principal. Now, we'll talk about kind of when we look at, let's say, investing, we like to break it down in three baskets. Are investors investing in growth? And is that a focus? Are investors maybe looking for value? And is that a focus? And it seems like almost ever present, are investors looking for, let's say, income? When we talk about income, of course, we're really talking about those areas that the companies are almost like monopolies, and they're not startup businesses, and they're giving back a majority or a chunk of their earnings in the form of a dividend payment itself. Now, we're going to look at all three baskets here today: growth, value, and income, and kind of see where do we see some of that strength. With that said, let's go to the chart of the day. Okay, we've been saying for a couple 2-3 weeks now, you want to kind of talk about where the market might be going. You got four charts, right? You got oil, you got the VIX. Now, by the way, when you look at oil, you could type in /CL for light sweet crude. It's just a different type of crude and also where it's from. If you looked at, let's say, Brent oil, which is on a world basis probably the most quoted oil ticker, we're not trading it. We're looking at the price for the May expiration, okay, or delivery. So, and then we talked about, so you got oil, VIX, US dollar, and where are the rates? If those four charts, okay, oil, rates, VIX, US dollar, if those are pressing to the upside, it's going to be hard for you. You got headwinds coming at you as a stock investor. Now, if we look at, let's say, Brent oil, we've just kind of been seeing cruising to the upside here and pressuring. Now, some of these companies, like example given, the Chevron, of course, knocking a brand new high yesterday, ExxonMobil knocking a brand new high yesterday, ConocoPhillips. I mean, this is getting old, okay? You get these companies that are selling that stuff, and you're just kind of seeing a grind to the upside, among others. FANG, that stock hitting a brand new high here today. But the companies that are selling that, it's actually increasing the likelihood that they could actually hit the earnings expectation or exceed it, of course, as those prices steepen to the upside. I'm talking about the price of oil. Now, when we look at the VIX in general, we liked it better yesterday. We liked it better when that VIX was closing or near that low. Today, up a little bit. I guess if we kind of said, what's the good thing about it? It's up, but it's not up above the shorter term moving average. Still at 23. Remember, if the VIX is at 16, it's pretty much assuming the market's going to fluctuate a percent-ish, low to high, range-wise. And if you look at, if we're at 24, it's going to forecasting that the S&P is going to move probably 1.5% range. So we're on the ocean of the stock market and the waves are higher. When those waves are higher, it might change what investors are doing and what they're looking at and how they're setting up orders and the strategies that they're picking. Okay. Now, when we talk about, and I think that's a kind of important to understand, as you get different market conditions, the investor might consider changing strategies. They also might try to change the direction of what they're trading. Now, when we take a look at, let's say, the stock market, NASDAQ itself, we're at a very critical juncture. Can we get a bounce here? Of course, as Brent oil is going up, it actually puts pressure on almost everybody, okay, worldwide. And so there becomes a reasons, if you will, to try to step in and alter that path. The steeper that oil goes and the longer it stays up there, the pressure starts to mount, of course, okay? And it affects, it's like dominoes, okay? It starts to affect other areas. And now if you take a look at, let's say, the Dow Jones, that's the one that's just been absolutely maybe the worst, okay? So as you look at these large multinational companies selling in US dollars, as the dollar went up, volatility hit, Dow has just been really ugly. And if you look at, let's say, the SPX in closing here, you're going to see the SPX kind of right where the NASDAQ is. Now, what I've been saying is, you got to ask yourself sometimes is, how much worse can it get? I mean, could it get worse? Yeah, for sure. Okay. I'm 40. I'm going to be 49 next month. I've seen some interesting things. Okay. And the biggest actually thing is when you talk about this, could it get worse? Yes. Could it actually relieve some of the pressure? Yes. Depends also what you're trying to do. Like, do you like to go bearish? Do you want to go bullish? Do you use the volatility events to try to get in? Okay. Now, we're kind of the latter of that. And I think that's probably how most investors are, because they might not have margin accounts where they can go short, etc. Now, that does not necessarily mean we're not going to bring up a bearish position. We'll follow through on the Lulu position from last week, and I'll show that in just a moment. One thing I do think it's worth noting here is when you look at, let's say, staple stocks, IXR hit a fresh recent low. We said when the market kind of gets to that crescendo moment where when do you think it's going to turn? You got to get probably almost everything where there's no places to hide. Everything almost is going down. You see staples getting pushed down, but if you're an income investor, you probably like that. You get lower price multiples and potentially higher dividend yields. Okay, keep an eye. If you look at healthcare, well, they might need to be checking in themselves. Healthcare's even gotten pushed down. What about that area of, let's say, $IXRE, the real estate index, kind of neutralish in that range? And if you look at, let's say, utilities, that's held up the best. Okay. Now, I want to kind of just take a quick look at that Lulu position from last week. Does anybody remember walking through a bearish example? Okay. Now, just super quick, I want to talk about this position before we look at some new ones. So first off, let's go back to the paper money account. Now, here's the thing. When you went to college, they explained to you how to go short, right? I mean, they wouldn't just teach you how to go only one direction. You wouldn't ever pay that much money in college fees if they only taught you one side. Okay, that's funny. Now, so example given, if you're a stock investor and you go to a margin account, you cannot do this in an IRA. It will reject it. Stocks, you can go, or try to, you can go long, you're buying, thinking it's going to go up, or short, bearish, you think it's going to go down. That's kind of interesting. Most people don't talk like that. Now, if you take a look at this, it says ETB, easy to borrow, meaning the brokerage has an inventory of these shares that could be borrowed for a period of time. We talked about this, okay? It's not new. We talked about it last week. Now, if we take a look at this, if I click on the ask, we're buying. If we click on the bid, we're selling. Now, down below, you're going to see if we're bullish or we bought the shares, well, we'd have plus 50 shares. We don't have plus 50 shares. We've got minus 50 shares. So what does that mean? It means you're short. means we want to sell. Now, everyone say this in the Southern accent so you remember. Sell high, buy low. Okay? You're trying to sell high, and you're trying to get the price to fall. Now, we were kind of testing the Lulu example and said, and we talked about Adobe too, could Lulu gap down on earnings? Now, where was the stock sold? It was sold at 164.74. Now, does it have a dividend? It does not. Why does that matter? Well, because just like if you borrowed money at the bank, they're going to ask you to pay the interest. Okay? So on these stocks, you have what's called short interest, but you also have, in this case, you're liable for the dividend payment. Okay? So if it paid a dividend of 10 cents per share, the person who borrows a share is going to pay that person or persons who are long those shares. They want their dividend. Okay? So there's some risk to doing short. Now, the other risk to doing short is, well, wonder if the stock were to gap to the upside. Well, let's take a look and see what happened. Now, if I said what was the most frequently asked question, okay, whether you talk about doing a bearish position or whether you talk about doing a protection example, the question is always, well, where do you get out? Well, in a bullish trade, you're trying to exit if you break support. In a bearish trade or protection trade, you're trying to exit if we break resistance. Okay, let that sink in. Now, where is resistance? Well, if you take a look at this right here, you're now going to see is we're at 163.83. And if we go above that by 1, 2, 3%, etc., you're now the ladder of what we just said, which is if we break resistance, instead of making a lower high, we're making a higher high. Wait, if you make a higher high, what typically comes after a higher high? It's a higher low. Wait, if you make a higher high, you make a higher low. You're in the short term, you're making an uptrend. That does not sound like a great trade, really, for a bearish example. Are you following me? Okay. Now remember, you understand this, it's going to help you down the road with something that is leveraged or leveraged, whatever you want to call it. Now, let's go back to this. Let's imagine we said, you know what, James, the reason why I did the bearish trade is I was kind of thinking that there could be gap down risk and I was going to try to benefit from that. So how do you get out of the trade? Wonder if you said what I thought was going to happen did not materialize and I want to get out of the trade. Can anyone explain to me how we get out of the trade? Well, let's imagine you owed American Express $50. How do you get out of that position? We know exactly what you do. You give them the $50 back, okay? Well, in this case, we're not giving them dollars per se. We're buying the shares of stock, which takes dollars. And what we're going to do is I'm going to click on the buy. I'm going to cancel these orders, cancel OCO group. So instead of having a target and in this case, a stop position, now what we're going to see in this case is we're just going to now buy these shares back. I'm going to right click, create closing order. Now remember, if we create a closing order, we're going to buy those shares back. Now, before I do that, are there any questions? Now, this was meant to be an example because there's been some questions upon, is there a commission? Nah, there's not a commission, but it does take the capital to buy the shares back. Are there any questions? Just want to see something real quick. We still good? Okay. Just want to wait. Okay. So I'm just showing on this that we're buying the shares back. What we're trying to do is we're trying to, for example, if we buy those shares back, we're trying to grab that position did not gap down like we thought. We thought there could be that risk. We're buying those shares back. That's the capital that we need to buy those shares back. And now you're going to see is what's the commission? 0, because it's U.S. listed equity. We buy it back, send the order. Now we went from negative 50 shares of stock, which is a bearish stock position, to 0 if that trade fills. Now we'll watch that. If that trade fills, it should now go to a position of 0. Now, just real quick. Now the comment from Deep AK Hebar 7353. We are closing because we expected Lulu to go up. We expect Lulu to go up. That's correct. Okay. So what we're seeing on this chart is we did this trade kind of over earnings with the expectation that it could drop. okay? It didn't drop. And this morning, you saw that stock really get above that area of resistance in the shorter term. And we're trying not to be in a bearish position where that stock is trying to reverse. What would actually give us the idea that it's actually reversing? Well, it's like what we talked about on Monday. Well, the 4 candlesticks, right? Bullish engulfing, piercing line, hammer, inverted hammer. From that, if you start to get, let's say, Cajole dots on the chart or shorter term moving averages going green, well, those are usually the precursor to something going up. So the answer is yes, we're trying to get out, and we're trying to not be in a situation where we're bearish and having the stock go up. So that's correct. Now, okay. Yeah, BJ says there's definitely sound. Okay. Now, Dragon Rider. So Dragon Rider actually says cash flow negative, dividends pay up. Why? Well, so sometimes on Lulu, I didn't see the dividend. So I'm not sure on that one, Dragon Rider, what you're saying on that. We're not seeing a dividend on that. Okay. Okay. Yeah. We were down for 20 seconds. Yeah. Welcome to the internet. Okay. Now, just real quick, any other questions on that? Now, the other one I just want to make mention of is the example given Disney. Okay. Now, Disney is it bullish or bearish? Type in the chat. Is it bullish or bearish? It's bullish. No. Is it bullish or bearish? Well, I don't know. I mean, how do I know? Well, it's a plus or minus 50. That's minus. That minus is a bearish position. So one of the ideas that we kind of have left is, can you get, if this crude oil stays higher and higher and higher, do people start to second guess maybe taking a vacation to, let's say, to a place that might be more expensive, whatever. You got to travel there, things like that, whether it's driving there, flying there, whatever. And so we're trying to kind of see, can that oil price affect, which, by the way, it's already had, but can you actually get, let's say, Disney to drop as well? Now, the one thing you probably want to do is maybe even consider lowering that stop. On bullish trades, we're setting stops below support and or a higher low area. On bearish trades, we're setting stops above lower high areas. Okay? So now in this case, so on bullish trades, stops below support and below higher lows. Bearish trades, setting stops above resistance and above lower highs. So this was old support, new potential resistance. Then we actually fell down. We went down, came back up. Why did I mark the 102.10? Well, because that's the last lower high area. That's where we had green candles that turned to red. That's a lower high. And if we look at that 102.10-ish, just kind of finishing up this talk on this, but it would be a good idea to get some practice in the paid money count, in the margin. If we take 102.10, add 2% to that price, it's going to get us to 104.14. Now, on bullish trades, we try to move stops up. On bearish trades, we're trying to move stops down. Okay? So I'm going to move this down to 104.14. Okay, there it is. Now, I'm going to be 2 pennies off. Forgive me. Send the order. Now you're going to see its move right there. Now, are there any other questions? Yeah. Okay. Okay, got that. And I'm just double checking. Yeah, Delta, that got stomped out. That was with, now, by the way, let's kind of talk about a couple of these airlines. Let's kind of, let's just double check. I think what actually happened on Delta is we tried to do that trade in the IRA account, and I think it rejected it, and I did not go back and put that back in. Okay, that I can remember. I could double check. Now, the one thing, let's kind of talk about this travel area. Of course, oil, right? Now, if you take a look at this, Delta, just a kind of a couple things, okay? If we take a look at this, kind of some labeling up top that I think is helpful. Last earnings, it's 44 days ago, right? Earnings per share, actual, 155. The estimate was 1.52. They beat by 1.5%. Now, they kind of raised the guidance a little bit. The stock gaps to the upside. Okay. Now, if you look at this, you got the next coming earnings right on the date of 4/8. Now, let's go back to this. We know that not all investors are using very short-term moving averages. We know that. Now, the one thing I want to kind of point out before I go to this next chart is there's some interesting movement in the travel area right now. If you look at Marriott, here's Marriott. Now, here's the thing. I got to say this quietly. My wife loves a vacation. It doesn't matter how many vacations I take her on. We cannot leave that vacation until she says, where are we going next? Okay. I have a rule in my house. If we're leaving the house, it better be a really nice place. Okay. Okay. It's not just about go on vacation. Now, Marriott getting a little bounce here. Let's talk about that. Let's talk about Hilton. Hilton's kind of in that same area. So Booking, Expedia, things like that. You're kind of seeing them at where they've had a sell-off and they're starting to get a bounce here. Now, what about you, some of you people in Chicago, and you're saying, well, what about the United Airlines? Not everyone is near a Delta hub. Fair. We see UAL kind of drop down and it's right back inside, trying to get back up inside this channel. But let's go back to just real quick, Delta first, and we're going to talk about it from a bullish stance. Now, if I go to, for example, let's say this chart right there. Now, what I'm going to do is let me just take two things off the bottom so we can see it. Okay, right there. Okay, now let's kind of talk about this. Now, the chart I really also want to bring up is, let's say, the weekly chart. So when you look at, let's say, Delta on a weekly chart, if we were to kind of say, where do we see some support levels? Support levels, horizontally speaking, if I said that, it's probably going to be right around the range of, let's say, $55. Now, here's the thing is, when prices go down, it's the horizontal levels that tend to actually be more these support levels. Why is that? Well, because the diagonal levels, which are kind of the momentum support levels, those tend to have been broken. You fall down to months-long horizontal support levels. Now, whenever we see, for example, these orange, purple, red color candles, you're in the flag, you're in the pullback, right? Now, obviously, if we had only orange and purple, the sell-off did not get to the point of a red color candle, meaning price below both moving averages. Now, if we look at this chart, someone clearly is trying to play that bounce. Now, when we go back to look at, let's say, the fundamentals of this business and kind of say, look, if we kind of pull this up and say, where have they really been? Now, I want you to put your business owner hat on, okay? You're not buying the company for its ticker symbol. You're saying, are you making any money, honey? Okay? And what do you think you can do in the future? Now, 2021, 46. Obviously, that's coming off COVID. 2022, let's go on vacation again. And now you're going to see in 2023, 90. That's a big jump. You actually see from 23 to 24, 90 to 95, and then from 95 to 96 from 2024 to 2025. You got to remember something. These numbers should be higher because the cost of those tickets over time are increasing, okay? They're not getting lower over time typically. Now, when you look at the earnings per share, 44 to 206, 206 to 717, 717 to 533, drop, and then you actually see the bounce back. Now, there could be reasons for that, okay? But overall, pretty strong. Now, if you look at the comment came from Dragon Rider is free cash flow. Oh, man. Free cash flow. Okay, so that free cash flow is to the firm, okay, and that's an important number to look at because that kind of think of that as the money that's not tied up. Okay, they could invest back in the business, they could pay off debt, they could pay dividends, and so on. That number is very important. Think about that like your cash flow number. How much money do you have after you take in money, you pay your bills, free cash flow. The higher the number, the more options that you potentially have, right? Now, if we take a look at this, I'm going to go back to Delta, and is there a trade example on Delta? Well, I mean, if we're talking about just trading trading kind of the moving averages itself, this gap up level. Now, by the way, this class, it's a stock class, okay? Some of you might be thinking, James, I would do something different with this. I understand. But in this class, that's not where we're going. If someone said, where do we kind of see resistance on this chart? It's right around 66.08. Support where we gapped up to. Why did I draw the line right at that level? Because that's where it gapped up to. The gap up on a green candle. So when we gap up, and if it's a green candle, we draw the line at the open of that green candle. That is probably the area where it might try to stay above. That's where many short-term traders would probably set their stops below. Now, we do have some resistance above us, noted. Now, you got to ask yourself the question, do you think actually what's happening on the straight over there is going to get worse or better? Could it get worse? Sure. Okay. Could it get better? Well, it better. Okay. The longer it stays in the situation, the more painful it gets for almost all countries. Okay. By the way, for almost many companies as well, not all. Now, if we take a look at this, let's say the investor says, look, James, I'm going to right click on this chart, right click, buy custom with OCO bracket. Now, if I do this, if we do the bracket order, what we're really saying in this case is we're going to want to buy those shares. And then number two, we're going to set a target. Now, if I said, look, I think it could go up, but I'm not sure if it's going to go up to this old high of 75. Wonder if I only thought it was going to go up to, let's say, 72. So when we're looking at a position, we're always kind of thinking, if I get in, can we go up 6, 8, 10%? Why is that important? Well, because that really goes back to the scenarios that could be the potential gains to offset the potential risk. Think of it like a 1-to-1. So if we put a target, let's say 72.50, okay, dated GTC, you're now going to see the stop GTC as well, and then where's the stop? Now, in this case, I'm going to try to give it a little bit more breathing room than 63.30 support area. So I'm going to take where that moving average is, about 61.71, and I'm going to set that stop right below there by 2%. Okay? Now, if we take a look at this, 60.47. Now, remember, in type of like news type of situations, geopolitical, things like that, it can only, sometimes it could take one tweet of we're done with the operation over there, things like that, whatever, okay? And all of a sudden, the market rebounds, okay? Sometimes quite a lot based on one news event. The higher the volatility, that's what can happen sometimes. And so you have to understand that 60.47 and vice versa, like we've seen when you have a news negative, the market prices that in almost immediately, okay? Now, in this example, what you're going to now notice is we're going to buy the shares of the stock, target, stop, confirm, send. Now, how many of you think it's a little abnormal to see stocks, for example, like Marriott and Hilton getting this type of push? Does anyone think it's a little awkward? Now, you got to remember, as people, we remember stuff, right? And so we're thinking about the recent price data, recent news, and we're thinking that everything is horrible in our minds. That's what we're thinking in our mind. Everything is horrible. But you got to remember is people that are buying stocks today are not thinking about what happened 2 days ago. They're actually thinking about, what do I think you can do for me now, from now to going forward? Yeah, I get it. I mean, as those things happen with Iran and things like that, we see the stock went down. That's the reaction. That's the end result from what happened or currently still happening. But that doesn't mean it's always that forever, okay? Now, if we take a look at this and we zoom in on this, some investors, they like to buy at support. Now, whether this just goes up naturally by itself, no news, just people buying and selling. This actually goes down, there's more people selling than buying, okay? The technician doesn't really care. They just want to say, look, come on down to support so I can get in and go up to resistance so I can sell. Okay? They don't care. Now, if we take a look at this, I'm going to go back to just real quick the analyze. Just for a moment, let's kind of see what we got here. Now, when you look at these numbers, you're going to kind of see that travel is discretionary. It's cyclical, right? It's not necessarily just a straight up linear trend. Now, if you notice kind of when you look at the sales, revenue divided by the shares outstanding. This revenue over time, which by the way, your spouse, he or she, by the way, it's not always her. It could be him too. You got 10, 16, 20, 23, 25. Okay. So sales increasing over time should, to some degree. Earnings per share, okay, increasing. Drop in 2024. 2025, better. 2023 was biggest. Dividends per share is probably where we've seen the biggest punch, where we actually in 2022 we're only at $1, and now we're at 264. Interesting. Now, when you look at the free cash flow, the highest free cash flow we had was really in, let's say, $8.68. We're still at 827. Okay, so pretty high here. Now, if you look at this, when you're gonna take a quick peek, when we go back to, let's say, Marriott, a lot of times when people look at this, they're looking for the horizontal support level, yeah, but they're also looking at the diagonal support level. And so if we were to take a ruler and bend it down or tilt it down, you're going to kind of see that you get like, we have horizontal levels of resistance, you get diagonal levels of resistance. Now, this is not to say just because it's getting above the diagonal resistance, it's guaranteed to go up. But in the short term, it is making a higher high. When you make that higher high, there could be a good chance you can make a higher low, which the investor sure wants the stock to really stay up above that 319-ish area. Now, I'm going to play the role of an investor who's a skeptic. That's fine. The more volatile the market is, they might choose to do dollar cost averaging. When I think of dollar cost averaging, I think splitting the entries in twos. Let's say if you had $5,000 of capital, you say, I'm going to take 2,500 and 2,500. You could say, I'm going to split it in thirds. $5,000 total position, about 1,600, 1,600, 1,600. If I was really a pessimist, I'd be thinking about it in quads, okay? 1,250, 1,250, 1,250, 1,250. The more trend it shows me, the more capital that investor might invest. Now, let's say I decided, you know what, I'm going to take a third. Well, if we said $5,000 was the amount of capital, example given, we would really be looking around 1,650-ish. So what I'm going to do in this case, I'm going to right click. And I've said this yesterday, and I'm going to say it today again. I think there's probably too many investors where they're either pin it or park it. And the biggest thing is the investor does not have to do that. This is like driving in first gear, second gear, third gear, fourth gear, fifth gear. You don't go from park to fifth gear, okay? You kind of build that speed. You build a position. 1,650 of capital. Why? Well, because if we're putting in $5,000 all at once, that's a full position. But what if I just want to slightly get in and say, I want to see if this trend can materialize? If it's a good trend, there's probably going to be some opportunity there to kind of buy in multiple buy setups, whether it's breaking out, whether it's actually a bounce, etc. A decent trend might actually have a trend that goes over time, trying to get in and build a position. Now, what this does really for the investor and why some people don't do it is because every day they're looking at 52 different new stocks. Many investors are looking at the same stocks day after day after day after day after day after day. And the reason why they do that is they want to find some of those stocks that have a trend and have liquidity. And they're aware of kind of where that business is in terms of its competitors. And it's not something unknown. They know it. Okay? And they're kind of trying to trade something that they're familiar with. And that probably increases the chance that they might try to take advantage of a trend versus saying XYZ stock I've never heard of before. I'm joking. There's XYZ stock now. But the biggest actually thing is when you don't know what the company does, it's a high degree of likelihood that the investor is not going to invest in it. Okay? So if we went back and said, where might it try to go up to? Well, if we kind of said even if it went up to here, now let's imagine in 2 weeks, they decide, hey, no more kind of the straits open, things are flowing somewhat back to normal. Not a perfect, somewhat. Well, where do you think the travel stocks go? Now, remember, you got to always be asking yourself, where do you think it's going to go? Not that it goes there, but where do you think it's going to go? Well, if we kind of put a target, let's say right around 350-ish or so, 350, I'm going to put it right there, stop underneath. That area about 319.08, 319.08 less 2%, it's going to give us 312.69. Okay, 312.69. Now, if you look at this 312.69, there it is. Stop, there it is. Now, remember, we're going to be watching over the next couple of days. Can we get a bounce? Okay. Now, if we take a look at this and say the volume, okay. Now, let's go back to this just really quick. Let's bring up the volume, okay. So let's just bring up, let's say the volume. We're just looking at the volume average, okay. Now, if I brought up, let's add that selected. I'm going to take it to the last, this defaults to 50. Let's kind of see where we are now, okay? So if we look at this right here, you're going to see, now remember, this is the volume average, that yellow line, that's the average. This is where the volume is as of right now, 2 hours into the market, okay? So when you take a look at this, now you got to remember something is when you see stocks, let's say where they go down, what does the volume tend to do? The volume tends to go up. Why? Because people are selling, okay? And when the stock price is going down, the volume tends to be higher as people run out. Well, when all of a sudden, let's say when we're buying, if you go back and look in this area, there wasn't really a ton of explosion to the upside on the volume, but the stock still went up, okay? So you got to kind of take that with a little grain of salt. That's the volume so far, okay? Now, any other questions with that? Now, the one other one I want to kind of just double check, okay? I want to bring up just real quick on the gold front. Gold's actually down 2.6%. Some of the stocks now, by the way, what is silver doing? Silver's under pressure, okay? Some of those precious metal stocks like AEM that blew through the support today, NEM blew through the support today. I'm not going to take some time to go over bearish trades, but if someone kind of said, are there maybe some other stocks that might, or a neighborhood that might be under pressure for reversing the trend, it's probably in the precious metal area, okay? And so why did you pick AEM? Why did you pick NEM? Why did you pick FCX? Because they're the most liquid names typically in that group, okay? And so if people are going to kind of buy them or sell them, they're probably going to come through those areas. Not all the time, but they're probably the most consistent in terms of volume. Now, let's go back to now, the comment came in from Christopher is on copper. Well, I'm not sure if we could say copper's not under pressure. I mean, it doesn't have momentum. It's struggling. Here's where it went up one day and then sold off, went up for 3 days, green candles, and then sold off, went up for 1 day and then sold off. Remember, okay, if you can't go up for more than 3 green candles before you sell off again, representing red candles, you don't have momentum. If you don't have momentum, the chances that you break through the support is probably becoming higher. Copper is being drugged down with gold and silver as well. Now, I want to go back to just real quick on the stock AMAT. Now, remember I said the language before is when you get a sell-off, you tend to fall down to horizontal support. Well, wait, hold on a second. If we fall down to horizontal support, can the horizontal line where we broke out from, can it also be in the diagonal line of support area? Answer, yes. Now, if we take a look at this on the stock, let's say, example given, AMAT, okay? So on the chart, in the shorter term, there was a little diagonal resistance, Okay, sure, we can see that. Now, when we draw that diagonal line, to get a real line of resistance or a line of support, you like that line not to be just 2-3 days, but probably about 2 weeks to really get some touches on it. Okay? So when we broke that diagonal line, day one of the breakout, right there. Now look at what happened before the breakout day. What type of candle is that? Type it in the chat. Okay, that I'm pointing to. What type of candle is that? Type it in. What type of candle is this? Type it in the chat. What type of candle is that? Okay, so you got inverted hammer. Okay, bullish engulfing. Doink, you could actually say another inverted hammer, if you will. Pretty much like a spinning top. And then when you did get the red candles, they're sitting right on the moving averages, sitting on the moving averages. Thin bodies, like those thin bodies, right? Thin body red candles holding the moving average line. Less than 3 days down. And all of a sudden, doink, as Bill would say, there's that green dot. What's the green dot telling us? We're trading above the high of the low day of the most recent lowest red candles. This one, this one, this one. Which is the lowest? It's 312. So that's why that green candle right there is showing that. And we see a little push here. Now, in this example, let's say, again, I'm going to play the example of, look, I'm a pessimist, okay? If I buy some shares here, the investor, I'm kind of playing the role out of the investor. If we say, look, I'll buy the shares, but I'm not going to come in with a full position. I want to do like half and half. So if I normally do $5,000, example given in a trade, $5,000, that's a full position. But I'm not going to buy $5,000. I'm going to cut the position in half, $2,500. Well, $2,500 in this case is going to be 7 shares of stock. Now, people get this wrong. They think, well, if I buy 10 shares, 20 shares, they ain't going to make no money or lose any money. Oh, that's funny, okay? You got to remember, if you're buying a smaller number of shares, it's moving a bigger and bigger dollar amount. Well, you move a bigger and bigger dollar amount, even still on a small number of shares, it moves hundreds of dollars, okay, up or down. Now, in this case, what I'm going to do is I'm going to go back and kind of say, where is that kind of area where it fell down from? That's right around 385. I'm going to put that number right around 385. Dated GTC. Stop underneath, which we're sitting on it, okay? Now, we can look at this. Let me zoom in on this. Where's that last higher low? Well, how do you see a higher low? It's easy answer. Red and green candle side by side. Well, the last red and green candle we had was right there. Well, where's the higher low? Easy answer. Draw a line from draw the line from the green candle, the open of it. Well, we got 346. Let me repeat what I just said. How do you see a higher low? Circle a red and green candle. But where is the higher low? Easy answer. Draw the line from the open of the green candle. Okay? Now, if we take a look at this, 346.16 less 2%, it's going to give us 339.23. 339.23 dated GTC. Okay? So remember, again, what we've done really over the last 24 hours, we're saying practice dollar cost averaging, practice spreading out capital. If you're always trying to get in with a full position in a more volatile market, you tend to actually see where you say, geez, I wish I wouldn't have gotten all in because I'm actually seeing more attractive prices, maybe even down near support again. And with volatility, it's hard to pick the exact spot because the news is unknown. You can't know the news in the future. Over time, you actually have a greater chance to be right. But in the short term, it's choppy, okay? Now, you got to target. You got to stop, confirm, send. There it is. Notice there's a capital outlay, no commission. I'm going to send the order. There it is, and I'll fix that. Might be running out of money in that account, okay? Yeah, so now the other ones I kind of want to make mention of. 2 stocks in closing. One of them that we're going to kind of keep an eye on is Netflix. Netflix had a pullback, but it's had a pull and it's sitting in the pullback. Earnings on that one actually coming up there, okay? That April 20th or so. The last one I'm going to make mention of is Google, okay? Keep an eye on that. That one has actually been trying to reverse, building a base. Wouldn't take a whole lot to actually hit a brand new high. I'm out of my time here today. I want to thank you so much for your comments and your participation. Okay. We reviewed actually the past recent short examples. Second, we practiced some new bullish examples. And so I want to kind of make sure that you're equipped on both sides of a trend with a stock strategy. Now, remember that with what we discussed, it was done for example, illustrative purposes only. Stay tuned for our next webcast coming up right at the top of the hour. And thanks to Connie for answering those questions in chat. There is a survey in the chat, just 2 simple questions. Click on it and answer those 2 questions. And thank you in advance. And also, I do read your comments, so I appreciate those in advance. Now, remember today's session on growth and value, kind of talking a little bit of both, maybe a little bit more growth as some investors think growth could be actually trying to stage a comeback. Stay tuned for our next webcast coming up next. Take care. Bye-bye.